Okay, good. All right, so let's get started. Good morning. Thank you for showing up today. I just want to show you what we're going to do today. This is, pretty much what I have planned out. It might not be in the perfect order, but basically, I want you to have or use the formula that we use as far as a written trading plan and how to make money with this work, which is essentially setup plus trigger equals trade entry, and then you manage it. So we're going to be going over all aspects of that formula. We're going to be setting up the tools. First of all, you do have a video that you should have the link to as far as setting up the actual tools inside of Thinkorswim. I will go over it quickly again, but hopefully you watched that video and got those set up in advance. We also have a video of how to set up the tools inside of, TradeStation and eSignal are up there, and also the Dynamic Trader software for anybody who has what I use. Okay, so we're basically going to start with a basic PowerPoint just to go over retracements, extensions, and projections. Okay, and then we'll be setting up the tools to identify the trade setups after we finish that PowerPoint. Then we're going to talk about identifying the trade setups on the short-term charts, and that's what we're really going to focus on. But the other thing that you have to realize is that you can day trade, but also against the daily chart work that I do. The only difference is going to be that you're going to use a shorter-term trigger because you want to get involved in the trade as close as possible to where your risk is defined for these day trades. So, for example, you might have some daily chart support that I'll show you, and you can use a 3-minute chart for a trigger, okay? So we'll be going over that. We'll be going over, setting them up mostly on intraday charts, like a 30-minute chart, a 5-minute chart, and all that, okay? We will be doing S&P. S&P is something that I do every single day. So anybody that has been in the trading room, you know that I do the S&P futures every single day. That's what I talk about. I'm typically looking at maybe a 30-minute chart or a 120-minute chart, and then maybe a 5-minute chart. It just depends. But I do set that up every single day. We're also going to talk about the triggers used for day trades. Okay, now I have a trigger that I've been teaching for quite some time, but there's also the RAF trigger that you can use. Okay, and that's something where I'm not an expert in that. There's probably going to be a link somewhere to a video that you can look at if you're not familiar with it, but I do have those tools on my Thinkorswim platform. We're also going to talk about kind of sneaking into a swing trade for those who would want to do that by starting with a day trade entry. And then let me just scroll up here a little bit. Then we've got to talk about, the trade management, which basically means where are your initial stops, where are your trailing stops, and what are your targets for the trades. Then the elements of a written trading plan, because this is really what you need to have in front of you so that there's no confusion. You have to know what your setup is, what you need to see for the setup. You need to have specific entry rules, and it might be as simple as I take a buy trigger moving average crossover on a 377 tick chart. Then you have to name where your initial stop is going to go, how you're going to trail stops, and what you're going to do with trade targets. You might not need trade targets if you're just going to use a trailing stop, because a trailing stop would eventually knock you out. Okay. I also want to talk about symmetry breaks, basically a pattern shift that is a reversal setup that works. I would say it's about 70% if you use another trigger after the pullback. And then the last thing that I'm going to talk about today, actually I may take this back. What I do have on the list is, if anybody has read the book, there is something that I called the ideal setup that used CCI with it, which gave you a higher probability setup because of the other indicator, and also it should be in the direction of a 15-minute chart in the same direction. And those are really high probability short-term scalp setups, basically. And then the only other thing, I'll probably give you a bit of an introduction to adding time analysis. It's just that we're not going to have enough time to focus on it. Okay, so for example, I might talk to you a little bit about time symmetry, but not too much about timing. We're just not going to have enough time. It's going to be a little bit too confusing if I throw too many things at you in one class. Okay, so that's pretty much the agenda for today. And you do have a copy of this in the box.com folder, and everybody should have the link to that. I believe I posted that already, but I'll give it to you again. That's also where you'll find those other videos. And as we set up trades in preparation, I will take snapshots, because I want you to be able to go to these snapshots and then recreate some of these setups. So I will give you some of the instructions using Thinkorswim, but then I have to go back to my own program because, like I said, I'm probably 4 times slower doing this work on Thinkorswim because I'm used to the other program. If you get used to doing everything on Thinkorswim, you'll be faster on Thinkorswim. Okay, but yeah, I mean, we will go over those tools. Okay, so let me get this out of the way, and if I forget to go over one of these, somebody let me know. All right, I've got that over on the side, and let's start with a short PowerPoint, and then after that we'll get started with the tools in Thinkorswim. Okay. All right. So this is just going to be some of the basics as far as the Fibonacci price relationships that we're going to use to identify the trade setups. Okay. So let me see if I can get the right tool to. Okay. It's not an arrow. Okay, well, I just gave you the link. If you didn't receive it, it might be in your spam folder. Okay. So basically, I use 3 types of Fibonacci price relationships to set up these trades. Okay, and you should be familiar with at least the first one, Fibonacci retracements. Is there anybody who's never heard of the Fibonacci retracements? Okay, because that's probably the one that most people are familiar with. But we're going to use, and we will review it, we're going to use a combination of Fibonacci retracements, Fibonacci extensions, and Fibonacci projections. Okay, so what we're going to do is we're going to go over each of these individually, and then we will be putting it together. Okay, so what we're doing when we run this combination of price relationships is we're looking for confluence of these key price relationships within a relatively tight zone to identify key support and resistance decisions. I run these zones every single day, and for whoever has been in the trading room with me during the day, you know that I come up with quite a few setups, probably almost every day. It's rare that we don't see something that holds up and gives you a trigger. Okay, so I've been doing this work since, let's see, probably 1989. All right, so it's never stopped working, and you know, I've been able to refine some of this as we've, you know, or over the years. Okay, so we're going to go over or start with price retracements. Okay, Fibonacci price retracement. We're going to use these for possible support and possible resistance. Okay, to look for support, which obviously you want to trade against, you know, on the buy side, we run the low to high swings and we use these ratios. Okay, so for example, we're going to take a low to a high on the chart and run the retracements back to this last low using these ratios: 382, 50%, 618, and 786. Those are the main ratios. Every once in a while, you might see me use a 0.236 if it is a huge, you know, rally or decline that we're working with. Okay, but retracements are pretty much just, you know, anything back to the last low using these ratios. Okay, so that's going to be for support. You run the lows to the highs for possible support. For resistance, you just turn it around. You're going to run any of the high to low swings for potential resistance using these same ratios: 382, 50%, 618, and 786. Okay, we're going to have more specific examples. This is just the basics as far as the lows to the highs and the highs to the lows. Okay, so that's retracements. Now, a Fibonacci price extension, and don't worry if you don't get it just yet, because we're going to do actual examples all day long. And it'll make more sense when we actually open the programs and start doing the work there. But a Fibonacci price extension, okay, or what I like to call an extension, is essentially a retracement beyond 100%. You're still only using 2 points. For example, you'll run a low to a high point and extend it downwards using the ratios of 1272 and 1618 to set up possible support. But again, it's only using 2 points. Okay, so low to high, extended using these ratios. And then the flip side, for resistance, you're going to take any of the key high to lows and go beyond 100% using 1.272 and 1618 for possible resistance. Now, since it uses 2 points only, you're actually going to run both of these types of price relationships on one tool because it uses the 2 points. We just have to enter the ratios into that tool. Well, you know, if you think this is baby stuff, that's just where we have to start, because there are a few people that don't have quite the background yet. But we'll get into setting up the trades and you'll get your value there. But anyway, so that's the extensions. Okay, again, basics. And if you do want to go over other basics, you know, there are free videos that I did on YouTube that you can go and watch. So we're not going to spend a whole lot of time on this. Okay, so we have retracements back to prior lows or back to prior highs that are underneath 100%. We have extensions that are beyond 100% using 1272 and 1618. And then the third type of price relationship that we're going to run to identify these day trade setups are what I like to call Fibonacci price projections. Okay, my mentor, Robert Miner, calls them alternate price projections. I just call them price projections. And the way you set them up is you use 3 points to run these projections. Now, this is where it can get a little bit confusing because most of the other charting packages calls the tool that you use to choose 3 points an extension tool. It doesn't matter what you call the tool. It just matters that it allows you to choose 3 points. Okay, and I talked about that in the book. But basically, what you're doing with the price projections is you're comparing swings in the same direction. So we'll be measuring a prior low to high swing and then projecting from a third point for possible resistance. If you're projecting upwards, it's for resistance. You're taking a prior high to low swing and then projecting from another high. And that's where you're going to look for possible support. You just have to remember that it takes 3 points. Okay. Now, the ratios that I use for the projections, and again, you're not going to understand this yet. Okay. But let's just get through, the definitions. What I use all of the time is 100%, which is also how I run what I like to call symmetry projections. So I'll measure a low to a high. I'll take 100% of that projected from the new low. Okay. And then sometimes, not all the time, only if I need it, I'll use the ratio of 1618. There are some other people that will use 1272, 1382, and all that. I just find that I don't need it. You can use it if you want to, but I just haven't used it in years. All right, so those are the 3 types of price relationships. And again, it'll make more sense when we apply it to an actual chart. So don't worry if it doesn't quite make sense just yet. This is just going to be a cheat sheet that is within the PowerPoint. So basically, just a reminder that if you're going to try and run price support, you're running lows to highs using these ratios, lows to highs for extensions using these ratios, and then highs to lows from other highs using these ratios. Okay, so that's for support. That's your little cheat sheet for anybody who's not already running some of these price relationships. And then here's just the flip side. Again, if you're going to run resistance, because, for example, you want to set up the sell side, you're going to run the highs to the lows using these ratios, highs to the lows, running these extensions, lows to highs from another low. Okay? Because you want to be going in the right direction, otherwise you're not going to get the right results. Okay, so, and as far as, the analysis steps, which we are going to go over, once again, you're just going to set up potential support. It's pretty much the same thing of what I showed you with the cheat sheet. You're going to run prior low to high swings, retracements, low to high swings, extensions, highs to lows from another high, projected downwards. That will also, or I'll give you the support for buy-side setups. And for resistance, it's exactly opposite. Now, what's different if you're not already familiar with my work, what's different is that I don't use single retracements for trade setups. I like to do what I call clusters, which is the coincidence of at least 3 Fibonacci price relationships that come together within a relatively tight range. I also use symmetry setups. Now, this is the only exception as far as you do not have to have 3 price relationships for a symmetry setup. You can have one single projection, and that will be a valid setup. So if this is confusing to anybody by the end of the session, one of the things that you could do is just use symmetry on the lower time frame charts, and you will have trade setups. Okay. Obviously, I like to have more confirmation, so I do all of the work. The only other thing that we can look at is maybe a 2-step pattern setup, and hopefully we'll be able to find an example of one of those as we go through the charts. I know that we did have one recently in gold futures. Okay, this, I don't know, is there anybody in here that also has Dynamic Trader but does not have the tool set up? Yeah, symmetry is a 100% projection of a prior swing. Okay, so this is how I have my tool set up in Dynamic Trader. For my 3-pointed tool, again, I just have 100% and 1618 chosen. For the 2-pointed tool, I have both the retracement ratios here checked off and the extension ratios. You're using the same tool because you're coming from 2 points. Okay, so we're going to go in and do this, and you have the video that we gave you in advance as far as setting this up inside of Thinkorswim, but we'll do it again. What we're going to do here is just make sure with the Fibonacci retracement tool from 2 points that we have all the ratios that we need. And I think they may have changed this tool slightly to, where something is hidden versus where something shows up. So we're going to find that out in a minute. But these are the ratios that we're going to use. And then as far as the price projections, which they like to call extensions, this is where you're setting up 100% and 1618. Okay, so we're not going to mess with anything else there. What we're going to do is go ahead and get started. Now, you will have a copy of this PowerPoint, so you can refer back to it. And then we're going to, let's just go ahead and get Thinkorswim started. Okay, so let's see if this is the best chart to use. Let me see if there's a chart that has a little bit more on it. Let's just use Apple, for example. All right, there you go. All right, this will be a good example because we'll be setting up, you'll be able to see each type of price relationship on this one. Anyway, so we have the drawings tool that you want to go to. And again, this is on the video. So if you don't follow it now, you can go back to the video. That was one of the reasons why we had that, sent out in advance so that you could do it on your own. But for some reason, a lot of people never find the video. So we're going to go to Drawing Tools, and we're going to go to Fibonacci retracements. Okay, so for an example of retracing, we're actually going to take this prior high to low, to run resistance. Let's say we want to run resistance in Apple. We're going to look at all possible swings, and we're going to take this high to this low, and we're going to run the retracements. Okay, so when you go to the drawing tool, again, you're picking Fibonacci retracements. You're going to click on the high, click on the low. Okay, and your retracements will show up unless you don't have them set up yet. I don't like candlesticks. Sometimes you can't see the wicks. That's the only reason why I don't use them. You can if you want to. Okay, so if you don't have this set up already, you're probably not going to see these ratios. Okay, so what you have to do then is go on top of one of the lines, right click, edit properties. Okay, so here's where you're going to edit the levels in. This is called the Fibonacci retracement tool inside of Thinkorswim, but it does both the retracements and the extensions from 2 points, any 2 points on the chart. So does anybody have anything different than this inside of Thinkorswim? Because now basically you check off the ones that you want to be visible. Okay, so once you hit edit properties and this box comes up, this is where you edit the levels in. So again, every once in a while I'll use 236, but not that often. But otherwise you want to have checked off 382, 50%, 618, 786, 1272 for the extensions, 1618. And then 2618, which I didn't really talk about yet, is really actually just a third target that I use for setups. If your values are different, go in and change them if you want to do the same thing that I'm doing. All you have to do is click on the box and change it, because this is the way you want it to look. And since it's actually a bit different than it used to be, what I'm going to do is take a snapshot, because they used to have it where it would say which ones were invisible versus the ones that are visible. Yes, and this will work on all time frames. So I'm just going to take a snapshot, and we're just going to call this toss retracement tool. And I'm going to post this in bots.com, which you also, or you should all have access to. Okay, so let's see. I've got it. I'm posting it right now. So again, save this link. As far as the colors, you do not have to mess with the colors. I basically just put in the same colors that I like to use on the dynamic trader, because I want to know what's inside the cluster. And sometimes, I need to see that it's an extension if it's in green, or I like to see, if it's a 618 retracement. Okay, I believe on the video it talks about, if you're not getting the exact high and low, it should be in the settings, and you want this snap to open, high, low, close. Okay, again, that's why you have the video. So you want to go to the settings, which are here. click on that under General, Snap Drawings, Open, High, Low, Close. Okay? So basically, if you look at this chart, it has given you all the retracements. I'm not sure why these are not written on, but it's got the 382, the 50%, the 618, 786, and then it also has the extensions from the same swing. So you have 1272, 1618. Okay, so this just, again, you use it for both retracements and extensions, the retracement tool inside of Thinkorswim. Now, when you go through a level, it's no longer valid. So the way that you erase this, yeah, somebody in Austin will be able to send you an email. I can't do that right now, but somebody back there can. But I've also given you the link to box.com, which has all the information in there. So that's the link that you need. All right, so here, the way to do the single line erase to get rid of the ones that we don't need, you hold down the Control key and you left click, and it will erase the levels that we went through. Okay, so basically off of this most recent swing high to low in Apple, the only thing that you have left as far as a retracement is the 786 back to the last high. And then you have extensions, which are above, that are actually going to be upside targets for Apple. Okay, so does everybody have an idea of how to set these up now inside of Thinkorswim? This one tool called the retracement tool will run retracements of prior swings and extensions of prior swings. Okay, because I'm going to do an extension next and I'm going to be using the same tool. But then we'll be using the other tool for the projections. Okay, so we're still using the tool, the retracement tool, but I'm going to run an extension of a prior swing to look for possible resistance. So for example, this high to this low, yeah, if it goes through a level, it's no longer valid. Okay, so as far as an extension, again, I'm going to run an extension, an extended move, basically a retracement beyond 100% of this prior high to low for possible resistance. Okay, so I'm using the same retracement tool. I'm going to click on the high, click on the low. Needs to catch though. Okay, that didn't work right. Let's go back here. We want to click on the high, click on the low. Okay, and then here's an extension. So we're going to get rid of the retracements because we already went through the retracements of this high to low swing. So I'm just going to hold the Control key down, get rid of the levels we already went through. And what you'll see is that there's a 1618 extension of that swing that is not too far away from that 786 retracement. Okay, so the one tool ran both the retracement of the prior larger swing and the extension of that swing. Now the other tool that we're going to use, yeah, if you go through it, you don't need it anymore, you delete it. But we'll be getting to that when we start going through the actual examples. Okay, so we've run a retracement and an extension on this chart. let's do an example of a projection, or what I like to call a projection. So for example, for possible resistance, I'm going to run 100% of this first swing up and project it from this low and look for possible resistance there. Okay, so remember, all we're really doing here is we're setting up key support and resistance decisions to trade against. As far as deleting a previous level, you hold down the control key. Again, this is on the video, or it should be. You hold down the control key and left click. Okay, so for a projection, you go to Drawings, Fibonacci Extensions. Okay, again, they call it the extension tool, but what it is it's the tool that allows you to choose 3 points on the chart. So you choose that, you click on, in this case, the low, you click on the high, and then you pull it back here, click on another low, and you can see the projection that comes in above at 116.96. Okay, now if you're using this tool for the first time, you're probably not going to see that. So go on top of it, go on top of that 100%, or anything that came through on this tool, right click it, go to Edit Properties, and then here, what you want visible, I always want 100% visible. If I'm going to use 1618, then I'll also check 1618. Or, you can have it checked if you want, and then just erase it if you don't need it in that particular case. But this is what the tool should look like. It should say Fibonacci extensions, and then these are the ones that should be checked. And you can then go ahead and save these as defaults. I don't know if you can rename it. Maybe it's possible. I'm not an expert in TOS because I use the other program. So as far as renaming it, maybe somebody else can ask that question or answer that question. Okay, but that's what you want to see. So I'm going to take a snapshot of this also. Yeah, Henry's a good one to ask on that. Okay, so where's my Snagit? Here it is. So I'm going to take a snapshot of this. And again, I'll stick around for a little bit extra time later. It's just that nobody ever watches, well, maybe not nobody, but a lot of times, a lot of people don't get the videos in time. So that's why I have to go over this simple stuff again. So we're going to save this as TOS projection tool. And that's how it should look once you edit it. Okay, and then you can save it as default, click OK. The pen, if you go to Drawings, you can change it to pan or pointer, because that will change it. Again, I'm not used to using this every single day, but you do have the tools that you need to do this. Okay, so that's how you're going to set it up. I don't use 1272 for my projections. You can if you want. I don't use it. Okay, well, I don't use the others. I've used this method, like I said, since 1989. It gives me enough as far as setups. So I've never needed to add anything else. Besides, you don't want anything else to really confuse you. You have enough price relationships here. So for example, just on this chart that I did here in in Apple, you have a zone that you can watch for a possible failure in Monday's session. Okay, and it comes in between 115.07 to 116.96. So it's not a very tight range, but you can use that as resistance. All right, so let's get rid of this. Let's go look at something else. How many of you trade the S&P futures? Okay, so most of you do. So how many of you have already seen the work that I do during the trading day? Okay. All right, so again, this is something where we'll start with, let me just check my list here. Okay, so what we're trying to do every single day is run price relationships to trade against. So if we're going to do day trade setups, even though you can day trade against a daily setup zone, okay, we're going to set up most of this stuff on the lower time frame charts, because that is where, if you don't have this set up in advance, or let's say, for example, I can run price relationships for you the night before, but if it makes a new high, everything has to be recalculated. There's plenty of stuff on the daily chart. I'm going to show you, let's just get this one checked off, because let's see, I did make a couple of charts. Okay, so for example, a day trade is essentially where you're going to use a very short-term trigger chart to enter the trade, and you're not going to keep it overnight. Okay, so for example, when we had a trade set up in Apple on the daily chart, do you think you could day trade this? If you had this level or this zone in advance of 107.27 to 108.25, and you knew that was support, how do you think that you enter that for a day trade? What we do is we go to, or you want to use a very short-term trigger chart that will trigger close enough to where your risk is defined, because that's what these price relationships are doing. They're defining your risk. Okay, so on the daily chart, when we had 107.27 to 108.25, an example of a day trade entry. Okay, we're going to have to go back to when it tested, let's see, 108. Yeah, 108.25 looks like it was the actual low. Get that E-signal chart back. Okay, so let's talk about triggers real quick. A trigger is essentially price action that tells you that it's worth placing a bet against a zone. Okay, and what I usually like to see is the combination of a moving average crossover, and on the intraday charts, I use an 834 EMA for the crossover. And I also like to see a pattern shift, which is basically, if you look at more of this data on the left-hand side of this chart, this is a 5-minute chart, which just got lost behind the other stuff here, but okay, so you have a 5-minute chart. And if you look at the left-hand side of the chart, you definitely had a bearish pattern of lower lows and lower highs as you tested that support cluster. Okay, so I wanted to see two things to tell me that it was worth looking at the buy side, And again, you could use a 1-minute chart if you want. Sometimes a 1-minute chart's too noisy. A 2-minute chart, a 5-minute chart, or a tick chart. But you want to see both the moving average crossover and you want to see a pattern shift. In the case of a buy, you want to see the pattern shift from lower lows and lower highs to higher highs and higher lows. So when you both see the moving average crossover after it hits the support, and it also takes out a prior swing high, that's your signal to be a buyer. And then your risk at that point is underneath this low. So a day trade entry would have been when you saw both of these things occur. So you saw the moving average crossover here, and then over here you actually took out the prior swing high. Okay, that's one way. So as far as day trades, again, your choices are going to be to use maybe a 3-minute chart, 2-minute chart. Some of you will use a 1-minute. I think you need to test it before you use a 1-minute because sometimes that's a little bit too noisy. Or a tick chart. But bottom line is you want to go to the lower time frame chart to see if it triggers an entry against where your risk is defined. Okay, so that's an example of a daily setup or a daily setup zone, which you could have taken for a day trade. You just don't take it overnight. Yeah, the moving averages that I use on a daily chart are the 250 simple. Okay, so if you watch any of the updates that I do on Twitter or, the end of day update, you'll see that on the daily chart, I use, this is the 200, is the pink dotted line. This is the 50. These are both the simple moving averages, and then I also use a 5 and a 13. On the intraday charts, I just use the 834 EMA crossover. Okay, and that's in the guidelines. So here's another example of where we had a setup zone in Amazon recently, that 792, 794, actually all the way up to 801. So if you were going to look at this for a swing trade, that's when I typically tell the traders to use either a 15-minute moving average crossover or a 30-minute. The 15-minute is the more aggressive swing trade trigger. But if you're going to use it for a day trade, then you just go down to the lower time frame charts. Yeah, I do think that the RAF is beneficial, but since not everybody is going to have access to that, let's see, this was 792. Okay, here. Okay, so for example, okay, so you know that the resistance, let's say, was 792.94 on the daily chart. So for a swing trade, you would have waited for both the moving average crossover, which you got over here on this 30-minute chart, and taking out a prior swing low. Okay, so here you took out this prior swing low, you had this moving average crossover to the downside. At that point, it was a short, but that was for a swing trade. If you wanted to take a day trade, you would have been in closer to here. okay? Because you're going to be able to see, let me just adjust this to a 5-minute chart, see if we can go back far enough. So you would be waiting a whole lot longer and you'd be risking more if you use the swing trade triggers, which are pretty much just the higher time frame charts. But if you were using, for example, a 5-minute chart trigger for a day trade against the daily resistance, it's a whole lot less risk. So here, where did we both have the moving average crossover? Okay, after testing resistance, here's the moving average crossover. And since you need both for the trigger, you could just say, well, I'll wait for the crossover, which you can set up an 834 EMA crossover in that actually will set off an alarm for you. Then just go look to the left of that and see if it took out a prior swing low. And if it did, you have reason to get short. Okay? So once this was broken, you had both the crossover and you had taken out a prior swing low, you could be short here and you can define your risk above here rather than waiting for the swing trade short, which would be down here, and then you're risking above here. Okay, so if you're using the day trading parameters, you're going to get in a whole lot closer to where your risk is defined. Okay, so you want to see where the prior swing low is. You want to see a swing low taken out. Okay, so let's just make that a little bit larger. Okay, so you see from the left-hand side of the chart, you know, it's pretty much, it's a little bit difficult to see, but higher highs and higher lows. This actually is a swing low that you could have used for that definition. If you're not sure about the swing low, then just defer to the moving average crossover. Now, as far as the stop, we'll go through the steps. Your stop would be, your initial stop, you have two choices as far as the stops. Okay, and the first choice would be above the high made prior to your sell trigger. So here's the high that was made prior to your sell trigger. So your stop could be above there. Or if you wanted to give it a little bit more room, you'd have the stop above the zone. Okay, so let's say you could have had the stop above, I mean, if you wanted to put it above the zone, that's kind of way up there. Typically, I like to just look at above the high or above the low before the trigger is seen. All you need to see is it to take out a prior swing low. Okay, and this to me counts as one. So does this. So does this. But this is the first one that would have been taken out. Okay, so let's actually look at, do you guys want to start with a trading plan first and then go into actually setting up the trades? Okay, because basically, let's do this. Because then you're going to know exactly what to do.